Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is April 4th, 2013. Doing another session of LiveCharts. The date almost escaped me there. I had to really think about that one for a second. So yesterday we got the big sell-off, probably like the second or third biggest one of the year that we've seen so far. And here we are into April. So the pullbacks this year has been slim to none. Just haven't seen much selling pressures come into the market. So when you get a day like yesterday, it catches pretty much everybody off guard. Um, Probably the most comparable ones that we saw came back in mid-February. March didn't have anything like that. So a lot of discussion out there then as a result of, could this be the top of the market? Are we finally starting to roll over? As long as I've been trading, these rollovers, they tend to eventually happen, but they don't happen all at once. Meaning, we had a down day yesterday, but that doesn't mean now we're just going to go straight south and we're going to start breaking support level after support level. It's going to bounce. It's probably going to suck in, more buyers, and it may even go higher and continue the trend. At least that's what we've seen so far. When we look at February, where everybody thought this market was rolling over back in February, but instead of it legitimately doing so, it put in a bottom after about 2 or 3% in a pullback, and then it just shot higher. Same goes in mid March. You had 3 straight days of selling, followed by a bounce in the fourth day, and that started looking like support levels were going to break. Not quite so. We wanted to make all time highs in the S&P 500. So what you have now then is this market that has broken out of a consolidated range that we had been trading in previously. If you remember when we put the Bollinger Bands, I said that it would have a little bit of a time pushing higher. I didn't think we'd get the sell-off like we did. I probably thought we'd see maybe like a push outside the upper Bollinger Band followed by some consolidation. But instead of getting that, we just get a straight 20-point down day on the S&P. Um, so that leaves a lot of people nervous. I'm not shorting any stocks yet. I can't say it didn't cross my mind yesterday, because when you're seeing stocks, get stopped out that you weren't expecting to have stopped out so quickly, the thought does say come across your mind to say, hey, maybe I should be putting on some short positions to curb my long exposure at the very least, just to have uh, some kind of a hedge on my existing portfolio. I declined to do that. I figure we probably have a better chance of getting a bounce out of this market, which is essentially what we got today early on, and then we just pulled back ever since. Um, Going into the final 2.5 hours of trading here, though, I wouldn't be surprised if we finally, now that we've closed that morning gap, to maybe push a little bit higher here. It could go either way. I'm not trying to say that's a certainty, but um, I think now that we've closed the gap and we just didn't, slice right through that um, break even level from yesterday, um, I think that's a good sign that there could be some kind of a buying interest that's forming here. So um, that's that on the S&P front. Let's look at the 30-minute charts. I don't do that too often, but I figure it's probably a good thing to do. Just to give us some perspective here, you can see the consolidated price range that we were trading in there. And then, like yesterday, this was obviously 1558 was a key level. We pushed right through that. We got back above it today, but failed to really hold much. This chart here absolutely tells me nothing, quite honestly. You have the semblance of a trend line of some kind, and maybe that's the only thing that we can really say has any legitimacy to it, is the fact that we had a short-term trend line. And I know that box is getting in the way, but I want to keep that there just for a reference point on the consolidation. You had a short-term uptrend that was forming on the 30-minute chart off of the 19 lows from March 19th, and it just kept marching higher, and then all of a sudden, of course, boom, we sell through the floor. Now, I always talk about too how I like the third test of a trend line as being my favorite time to get in. I mean, look at this right here: 1, 2, and then 3. That's where you get the biggest surge on this 30-minute chart, and then on the fourth test, it just sliced right through. Oftentimes, the fourth retest will hold, but there's just, I think the third test of a rising trend line is always, in my opinion, the best time to get in on a rising uptrend. So it cut right through, bounced back up today. Um, retested the resistance or the support, the underside support level, and then it has sold off and filled the gap. So from a 30-minute perspective, you want the S&P to try and regain this rising trend line and maybe resume what was lost yesterday at maybe, but it would be at a more flat level. So you probably, and I'm just shooting from the hip here, but you got a little bit of a trend line going here with starting here and then going on, and maybe that's where it found its support from yesterday's sell-off. Let's look at some of your charts. Oh, you know what? Before I do it, one more chart. Let's look at one more here. The weekly. Two trend lines, exactly the same. This one's going on a little bit further than what we saw from June through October, and so maybe there's some legitimacy to the fact that there could be a pullback in that. That these time frames could be running at the same duration, so that if we're going to follow the same action from June through October, that means that this one that started in November and is hitting some resistance here in April could be ready for the sell-off. Prior to this week, how many sell-offs have we had on this rising uptrend? I can count 4. So that's not a lot. That means 75-80% of the time we were finishing higher. And right now, as we're speaking, the S&P is popping, and that's a good sign that there is some dip buyers coming into this market. Just looking at the 5-minute chart. Now, we only had 2 positions coming in today. I've added one since. The first one worth going over, AAP. This one looks still pretty solid. You got the base here, like a cup and handle action. It clearly broke out. Actually, let me put this on the daily chart. It broke out to new highs at 80 from the 8140 level, and it's trending slightly higher as we speak. I think everything looks pretty good there. It's holding to that 10-day moving average. If we broke below that 10-day moving average, that could be a reason to perhaps get rid of this position. But until then, I'm not too stressed by it. So I may look at tightening the stop loss on that tonight, and then I'm just not sure yet. So I got to usually wait till after the bell closes before I make those kinds of decisions. The next one, CRI, got into this one yesterday. Beautiful breakout so far. It held strong yesterday, and you can see there's some volume coming in on this stock from yesterday and today. There's some buying interest, and you got the cup and handle pattern there. You got the breakout at around 58.33, and it is pushing higher now that it has gotten above that 50-day moving average. So everything is looking pretty a-okay on this, despite the market that we're trading in. So keep an eye on those 2 stocks. I think they're looking pretty solid, and have no intentions to sell in them at this point. A couple of stocks that I did find that might be worth adding to your long watch list. Weight Watchers. Never used their product. Know a lot of people that have. But I really like the fact, it was trending down after it gapped down, and then it recently broke that trend down, and now it's been consolidating sideways for good couple of weeks here now, almost 3 weeks. And you could probably draw a box around this and show you the consolidation that I'm speaking of. So it is pretty clean. You got a little bit of a push out there a couple of times. There we go. Oh well, you guys get what I'm trying to show you. There we go. So I would say if it can break above this 42.50 level, this thing's going to go pretty strong. Ideally, you'd like to see it get up to 46, and if it can break through that, gosh, you could have a major winner if it could go fill that gap. But that's really not in the here or now. You really just want to see if you can get into the stock and maybe catch some momentum. Volume really strong today. A lot of that came off of this volume bar from 1020, where there was like an 800+ 1,000 shares dropped on it. So that accounts for a lot of the buying power today. But nonetheless, I mean, your average trading day is 833,000. So you got about 600,000 shares traded without that particular lot purchase. So this one I could almost justify getting in early on, not necessarily waiting for this 4250 level to strike, because you can get in and you can keep the risk fairly tight. So my thought would probably be like maybe like a 4065 stop loss that gives you about 22, or I'm sorry, 2.5% of risk on that trade. Another one is ROK, and a little bit riskier of a trade. I'm not sure I really like this one a lot, but compared to what else I was finding out there with stocks that had decent price patterns and volume levels, this was one of the few ones that I found that had good volume and I guess you could say an okay price pattern, but somewhat of a double bottom there. Just when you're looking at the highs and the lows, it's breaking out above 86.38. It's up about 2.25% or 2 1/3. So pretty stable stock overall. In fact, this is a pretty big price move for it. It's not something that, you know, the kind of volatility you see every day in this stock. So I would I could be tempted to get long on this stock as well. So, and then one stock here that I've been somewhat following because I think it's a bit interesting is this HK. So you have this rising trend line that comes off of the March lows. Look what it's doing here. Just sneaking right below this rising trend line and possibly creating an opportunity to get short. Now the drawback to getting in right now is that it has gone from 796 down to 716 716 without a single break. So it's overextended to the downside. Yes, it could keep going further, but what I would probably wait for is to see if it can consolidate some right below this level for the next like 1 or 2 days and then get short on it. So add that HK to your watch list and just see how it rolls for you in the coming days. That's going to do it for today. If you guys have any questions, feel free to drop me a line in the Share Planner Splash Zone. I'm in there all day. It's a paid membership, but free 7-day trial if you're curious on what it's about. And my email is also ryan@shareplanner.com for any questions that you might have. That's going to do it for today. Y'all have a wonderful rest of the trading session, and God bless you all.